Welcome to the deep dive. We're kicking things off today with GE Aerospace, a name that, well, it really took flight as its own public company back in 2024.
Right, a big moment for them. And this isn't just a rebranding, is it? It's built on this incredible legacy of innovation.
Exactly. I mean, think about it, the first U.S. jet engine, that huge leap with the first high-bypass turbofan.
The engine that got civil helicopters properly airborne, the biggest commercial engines out there.
And even that really advanced three-stream adaptive cycle engine. I mean, that's the kind of powerhouse we're looking at today.
Absolutely. And their 2024 annual report, which we're digging into, it really marks this new chapter. It's not just structure, it's a fresh start built on, deep aviation roots.
The scale is just mind-boggling when you look at it.
It really is. We're talking 70,000 commercial and defense engines installed worldwide.
Serving customers in, what, about 120 countries?
Something like that, yeah. And it puts things in perspective when you hear that, like, at any given moment, close to 1 million people are up in the sky using technology from GE Aerospace and their partners.
Incredible. And it's not just looking back, is it? The report signals really strong demand now. That backlog figure, over $170 billion.
Yeah, for equipment and services. Huge. It shows there's a big appetite for what they offer.
Okay, so let's unpack this. Our mission today is to really get inside that 2024 annual report, understand GE Aerospace now that it's independent, look at their business segments, their financials for this first year, and try to get a sense of what the future might hold.
Right. And the report basically breaks it down into two main reportable segments. You've got commercial engines and services, they call it CES, and then defense and propulsion technologies.
Let's start with CES then. Sounds like that's the main engine, pardon the pun, driving things.
You got it. CES is all about designing, developing, building, and crucially, servicing jet engines for commercial airlines, business jets, even some aeroderivative applications on the ground.
Okay, servicing seems key there.
Oh, it's more than key. It's dominant. The report highlights that the vast majority of revenue for CES, think around 74%, comes from the aftermarket. Services.
74%. Wow.
Yeah. And if you zoom out, that's something like 70% of GE Aerospace's total revenue.
Okay, so that massive installed base, what was it, 45,000 commercial engines. That's what's driving this.
Precisely. It's like this built-in revenue generator. Maintenance, repair, overhauls, spare parts. It's not a side gig, it's the core business, really.
So it's less about just selling new units all the time and more about that long-term relationship, the upkeep. What are their main strategies within CES then?
Well, the report lays out three main priorities. First, focusing on services and readiness for today. That's maximizing the value from that huge fleet that's already flying.
Makes sense. Keep the current customers happy and the engines running.
Exactly. Second is delivering the production and services ramp for new engines for tomorrow. So, scaling up manufacturing and support for the newer engine models.
Like the LAAP engine, presumably.
Right. And third is inventing next-generation flight technology for the future. That's where the R&D comes in, looking ahead.
That future part sounds interesting. The report mentioned a strong RPO, remaining performance obligation. What does that tell us?
Yeah, RPO. It's basically a snapshot of their booked future revenue. Work they've got contracts for but haven't delivered or billed yet.
And for CES, that jumped quite a bit.
It did. Up by $17.6 billion in 2024. That's an 11% increase.
Where did that come from?
A few things. Changes to existing long-term service deals, more engines actually entering service under those deals, and importantly, equipment orders, mostly for those ALIP engines coming in faster than they recognize the revenue in the year.
So a healthy sign for future work.
Definitely. A big RPO like that signals a solid pipeline, good visibility for future revenue.
And what about that inventing the future part? Any specific R&D we should know about in CES?
Absolutely. They're putting significant effort into their RISE program that stands for Revolutionary Innovation for Sustainable Engines.
Okay, sustainability. Big focus now.
Huge. Under RISE, they're looking at technologies like an open fan engine architecture. Really interesting concept. Potentially massive fuel efficiency gains there.
Open fan. So different from the engines we see today.
Visibly different, yes. And also exploring things like hybrid electric propulsion systems. These could be game changers for the industry, aiming for much lower emissions. Think of RISE as their big bet on the next generation of flight technology.
Very forward-looking. But no business is without challenges. What headwinds did CES face in 2024?
Well, the report mentions supply chain constraints. That seems to be a common theme across the industry, unfortunately.
Yeah.
And it meant they delivered fewer new engines than planned, which kind of offset some of the revenue gains from services.
Okay.
There was also a small unfavorable change, about $0.1 billion, in how they estimate the profitability of some of those long-term service agreements, just something they have to manage.
Okay, got it. Let's switch over to the other segment then. Defense and propulsion technologies. What's the story here?
This part of the business serves GE Aerospace itself, but also external defense customers, mainly in Europe and the US. It's actually made up of 4 distinct businesses.
4. Okay, let's break that down.
You've got Avio Aero, Unison, Dowty, and Calibrium Additive.
All right. Quick hits on each.
Sure. Avio Aero, based in Europe, is a leader in things like gearboxes, low-pressure turbines, combustors, turboprops. They're a key partner for the Italian military, and their catalyst engine is nearing certification.
Okay, Unison.
Unison is a big supplier for engine and airframe stuff. They had a good year, booked $1.6 billion in new defense contracts. And interestingly, their ignition systems even launched into space on some missions.
Wow, Dowdy.
Dowty is all about advanced composite propeller systems. Big news for them was a new depot, a partnership with the U.S. Air Force for the C-130J propellers, becoming operational.
And the last one, Calibrium Additive. Sounds modern.
It is. They use 3D metal printing, additive manufacturing to make key parts for the commercial engines like LEAP and the big GE9X, so advanced manufacturing tech.
That's quite a diverse portfolio under the defense umbrella.
Yeah.
Any major highlights or initiatives that stood out in the report?
Yeah, a couple of things. They highlighted their work developing a sort of digital backbone for the U.S. Army's big future long-range assault aircraft program. Important stuff for that platform.
Okay.
And they also had a successful demonstration of a hypersonic dual-mode ramjet. They achieved a 3-fold increase in airflow compared to previous tech. That's really pushing the envelope in high-speed flight.
Hypersonics.
Yeah.
Definitely cutting edge. Did this segment also see RPO growth like CES?
Yes, it did. Their remaining performance obligation increased too, mainly driven by orders for defense and system equipment coming in faster than they recognized revenue in 24. So strong demand signals there as well.
And the challenges on the defense side?
Well, one notable thing was a drop in the number of defense engines they actually delivered in 2024. It was 490 units, which is down from 556 the year before, and even more from 632 in 2022.
Any reason given for that?
The report doesn't detail specific reasons in the summary, but it does mention ongoing incremental investments they're making in next-generation products, which can sometimes affect near-term delivery numbers or profitability.
Okay, investing for the future there too. Right, so we've looked at the 2 segments. Let's zoom out now and talk about the overall financial picture for GE Aerospace in 2024. Sounds like it was a strong year.
Overall, yeah. The headline is double-digit growth in both orders and adjusted revenue. Pretty impressive for their first year out.
Let's get into the numbers. Revenue.
Total segment revenue hit $26.9 billion. That's up 13% from $23.8 billion in 2023.
And how does that break down between equipment and services?
Equipment was about $7.1 billion, but services, as we discussed, was the lion's share at $19.8 billion.
And what drove that 13% increase overall?
It was mainly coming from CES, the commercial side. Things like higher sales of spare parts, more work done during engine shop visits, what they call internal shop visit work scope, also better pricing, and a favorable customer mix.
And defense contributed too.
Yep. Defense and propulsion technologies revenue was up 6%, hitting $9.5 billion, so growth across both segments.
Okay, top line looks good. What about the bottom line? Profitability.
Also strong growth there. Segment profit reached $7.1 billion in 2024. That's a big jump, 25%, compared to $5.6 billion in 2023.
And the margin?
Segment profit margin improved nicely, too, from 23.7% in 2023 up to 26.2% in 2024.
What drove the profit increase? Same factors as revenue?
Pretty much, yes. Primarily, those positive drivers in CES, the higher volumes, the work scope, the pricing.
But you mentioned offsets earlier. Did those impact profit too?
They did, partially. The report notes that inflation had an impact, as did those higher investments they're making for future growth, and also that small negative adjustment on the long-term service agreement profitability we talked about earlier.
Right, and defense profit.
Defense profit was up, too, by a solid 17%, reaching $1.1 billion.
Okay, now earnings per share. The reported number, continuing earnings attributable to shareholders, actually went down. Why was that?
Yeah, that's a really important point to clarify. So reported earnings were $6.7 billion, down from $9.2 billion the year before. But the reason for that drop isn't really about the core operations in 2024.
No.
It was mainly because in 2023, they had these big gains from selling off parts of their ownership stakes in GE Healthcare and AerCap. Those were significant one-time gains.
Ah, so it's like comparing a year with a big asset sale to a year without one.
Exactly. Think of it like, you sold a valuable painting one year, big influx of cash. The next year, your regular business is doing great, maybe even better, but because you didn't sell another painting, the total income looks lower on paper.
Got it. So the underlying operational performance was actually better.
Precisely. That's why you look at the adjusted earnings. That figure strips out those kinds of one-off items,
Hmm.
and adjusted earnings actually increased significantly.
How much?
Up to $5.0 billion in 2024 compared to $3.2 billion in 2023. That gives you a much clearer view of how the actual business performed day to day, driven by those higher segment profits and also lower corporate operating costs.
Okay, that makes sense. What about cash flow? Free cash flow is always critical.
Definitely. And the report indicates good news there too. Free cash flow is up by $1.3 billion in 2024 compared to the prior year. Shows they're getting better at generating cash.
A positive trend then.
Yes, directionally positive, a significant improvement.
And we touched on RPO earlier for the segments. What's the total picture for GE Aerospace?
The total RPO at the end of 2024 stood at a really strong $153.6 billion.
Wow. How much of an increase is that?
That's up $16.1 billion, or 12%, from the end of 2023. So that backlog, that future revenue visibility, continues to grow substantially.
Driven by both equipment and services?
Yes, equipment RPO grew largely thanks to those LEP engine orders, and LEP is their workhorse new engine, high demand. And the services RPO also increased thanks to contract updates and more engines entering service under those long-term agreements.
So financially, it definitely sounds like a robust first year as a standalone company. Now, how are they planning to translate this into value for their shareholders?
Well, the report is very clear on this. They state a commitment to return a majority of their free cash flow back to shareholders.
And did they walk the walk in 2024?
They certainly did. In 2024, they returned over $6 billion to shareholders.
Over $6 billion?
Sow! Mostly through share repurchases, they spent over $5 billion buying back their own stock, which, tends to increase the value of the remaining shares.
Right. And the rest.
And about $1 billion paid out in dividends, direct cash return.
That's a serious return of capital. Does that mean they're prioritizing returns over reinvestment?
It suggests a balance, I think. They call it a disciplined capital allocation strategy. While returning a lot of cash, they're also still investing significantly.
Where are those investments going?
R&D is a big one. They put $2.7 billion into research and development in 2024. That includes funding from customers and partners, too. That's crucial for staying ahead technologically.
Like the RISE program we mentioned.
Exactly. And they're also planning capital expenditures, investments in facilities and equipment to support future growth and innovation. And they mention M&A, mergers and acquisitions, will be looked at strategically, focusing on things that bring clear synergies.
Okay, so a balanced approach. Return cash, but also invest for the future. So let's try to wrap this up. Based on this 2024 report, what's your assessment of GE Aerospace's health and its prospects going forward?
I mean, overall, it paints a really positive picture for their first year flying solo. You've got that double-digit growth in revenue and profit in the core segments, a clear commitment backed by action to return value to shareholders.
And that huge backlog doesn't hurt.
Not at all. That massive RPO, over $150 billion, combined with what looks like a positive demand outlook in both commercial and defense, gives them a really solid foundation.
Yeah, it'll be fascinating to see how they execute on that, manage the challenges we talked about, and keep innovating.
Definitely. And they're not just resting on their laurels, are they? Those R&D investments, particularly around sustainability with RISE, seem absolutely vital for their long-term position.
That seems like a critical differentiator going forward.
It really could be, shaping the future of flight, meeting those environmental goals. That's increasingly important for airlines, for everyone.
Now, just to be balanced, the report does mention risks.
Yeah.
Right? We didn't dive deep into the specific risk factors section, but what are the key ongoing challenges people should maybe keep in mind?
Sure. While the outlook is strong, those supply chain pressures we mentioned are still a factor. They impacted deliveries in 24, and that's likely something they'll continue navigating.
Okay.
And also just the inherent complexity of managing those very long-term service agreements. There can be a variability in projecting profitability over decades, so that requires careful management. Those are probably the main operational challenges highlighted.
Right. The annual report itself obviously has a much more detailed list for anyone wanting the full picture.
Exactly. The full risk factors section is there for a deeper dive.
So a final thought for our listeners then. You look at GE Aerospace, Strong market position, incredible tech legacy, this clear plan for shareholder returns and future investment. What do you think is the most critical factor we should watch? What will really determine their sustained success in this, constantly evolving aerospace world?
That's the big question, isn't it? I think it comes down to execution.
Yeah.
Can they keep innovating, especially on sustainability, while also managing those complex supply chains and service contracts effectively? Their ability to adapt to how aviation itself is changing that feels key.
A lot to watch, for sure. Well, thank you for joining us for this deep dive into GE Aerospace's 2024 performance.
My pleasure.
We definitely encourage you, if you're interested, to check out the full annual report for all the details, including those risk factors. And as always, we hope this gives you something to think about regarding GE Aerospace's strategy and really the future of the entire aerospace industry. Until our next deep dive.